Hello everyone, I'm Chloe Johnson and welcome to this Fresh Business Thinking webinar, the third in our Business COVID-19 series. Coronavirus is continuing to be a challenge for small businesses and entrepreneurs across the UK. The outbreak leaves an overwhelming uncertainty into the future for business owners. But this is a time where, as a business community, we need to come together and to support one another. And we're lucky enough to work with organisations and individuals who are passionate about supporting entrepreneurs during this difficult time. One of those is our speaker today, Daniel Priestley, co-founder of Dent Global. Daniel started out as an entrepreneur at age 21 and built a multi-million-dollar event marketing and management business before the age of 25. A successful entrepreneur, international speaker, and best-selling author, Daniel has built and sold businesses in Australia, Singapore, and the UK. Today, Daniel will be discussing the opportunities that businesses will face when this crisis is over and how COVID-19 can lead to reinvention. Daniel will be talking for around 40 minutes and then we'll have some time for a Q&A. If you do have any questions for Daniel, leave them in the Q&A function on your screen and we'll do our best to get to them later on in the session. That's all from me for now, and I'll pass over to Daniel.
Hey, thank you very much, Chloe. That was wonderful. It's great to be on the call. As far as I can see, there's only the three of us on my view, so I just want to check to see that everyone can see me and hear me. It says that there's 26 participants on the call. So would it be okay if everyone could just let me know in the chat section that you can see and hear this okay, and that you're doing okay, you're doing just fine. Wonderful, all good. Hi, Adam. Hi, Simon. Hi, Alison. Chelsea, good to see you. Great, fantastic. Okay. So as Chloe said, I'm going to go through and talk a bit about the current times that we're in and what we can do about it as entrepreneurs. And then what we'll do is we'll jump straight into Q&A as much as possible. Chloe, I don't know whether it's possible to change the view once we get into Q&A, whether we can kind of invite people that we can see everyone, or or just change that view a little bit. But it's up to you. I'm happy to go either way. So what I'll do now is I'll share my screen, and I just want to double check. Can you see this very professionally staged photo of me on the screen? I just need to know that that's all coming through nicely. And it says, yep, looking good. Thank you very much, Simon. I like that. Okay. So just a couple of little housekeeping things. If I do drop off with my internet, I actually have a backup internet. I can tether on my phone 4G. So over the last week, I have actually dropped off 1 or 2 times from the Wi-Fi for whatever reason. So I've just switched across. If that happens, it normally takes about 2 or 3 minutes. So just stick around, and I'll basically, if I just disappear, I will find another Wi-Fi connection pretty quickly. And that should be fine housekeeping wise. A little bit about me. I run something called Dent Global. We're an accelerator for entrepreneurs. We normally work with entrepreneurs who are running more traditional businesses, not so much 22-year-olds who can code, but more 45-year-olds with 20 years experience in their industry. We do a lot of acceleration work with about 3,000 companies around the world. We've got offices in Toronto and Sydney and Brisbane and London. We've got clients in Singapore, in the USA. So lots of different time zones. We've been going for 10 years with an amazing mentor faculty. We've got about 60 people on our team. And we've been featured in the press as one of the top business growth accelerators. And along the way, I've been able to distill some of the insights from working with so many entrepreneurs into some books about the entrepreneurial journey. So we'll talk a bit about that as we go. Okay, let's get into some key ideas. So the first idea I want to share is that disruption is really good for entrepreneurs. Disruption creates entrepreneurship. Some of the greatest companies in all of history have come out of recessions and huge disruptions to industry. And there's a reason for that. In times like 2018, 2019, where the market has been growing for 8-9 years in a row, you get this biscuit tin or this cookie jar accumulate, where all the opportunities start to accumulate under the FTSE 100 or the FTSE 350. And basically, the biggest companies in the UK start getting into all sorts of different industries. They start doing R&D. They're happy to lose money on different projects just to see what happens. And they accumulate all the biscuits in the biscuit tin. And then disruption comes along, it shakes that biscuit tin up, it tips it out on the table, and big companies, they go straight in and they start putting back their core business into the biscuit tin. So those big biscuits go straight back into the biscuit tin. And what they leave behind is huge crumbs, broken biscuits, all over the table. And what that means is that there's opportunities for entrepreneurs, things that big companies don't find terribly interesting, like 10 or 20 million pound businesses. They just ditch that off to the side. If it doesn't help them pay their payroll or their shareholders in the short term, it gets the flick, it gets left behind, and you see big companies reverting back to their core business. I'll give you some real examples of this. After the dot-com bubble burst, Kodak decided to get rid of digital cameras. They said, we're going to focus on our film and our photo paper business. We can't see how this digital camera thing is going to pay many bills in the short term, so we're not going to do it anymore. And that was the death of Kodak. We saw big phone companies like Telefonica and Vodafone, and in the US, the big Verizon and all those kind of companies, they didn't get involved in VoIP the way that they should have in 2009 and 10. They missed the opportunity, and now WhatsApp, basically is the number one international calling platform. So all of these companies got massively disrupted. One of their core businesses was hugely disrupted because they didn't have a business model that was around the VoIP business model. So WhatsApp was started by an entrepreneur who could not get a job and could not, basically had to go start his own company. So he started WhatsApp. So it's a great time for entrepreneurs. Let's talk about the bigger market, the broader market out there, the FTSE kind of market, or the general economy. And so here's what it looks like when the marketplace drops. But basically, it's almost always 1.5 to 2 years worth of dropping. And that's because there is a 3-part play that plays out. The first act in the 3-part play is Act 1 is the shock to the economy. So basically, in this case, we have the coronavirus hits and the stock market drops 20%. So that's the initial shock. The next thing that happens is the reaction to the shock. So what goes on is companies start firing people. They start getting rid of their non-core business. They start pulling back out of markets that aren't performing for them, and they react to the shock, and they basically shrink down in size substantially. And the third act is the reaction to the reaction. So when companies change their business models and fire a lot of people, and there's high unemployment, and there's all sorts of there's all sorts of companies going bust, too much debt, all of those things happen. So that causes a third impact, I guess you'd say. So there's the initial shock, there's the reaction to the shock, and then the reaction to the reaction. All of that plays out over about 18 months, 2 years. So if you think, sorry, apologies, I got it's nothing serious. I can tell you that it's not the unspeakable. But I can tell you that if you think that this impact is going to be small, I mean, if you're still in the camp that you think this is going to bounce back sometime soon, this is the big one. This is going to be a really, really big shock. We have a biological shutdown where people can't leave their homes. We have tens of thousands or millions of people on 80% of their pay. In the US, 1 in 12 people has now registered as unemployed in the last 3 weeks. People who had a job 4 or 5 weeks ago, 1 in 12 of them are now technically unemployed and signing on to unemployment benefits. So you have massive unemployment. You've got a huge shock to the economy. You've got a lot of stuff that we'll never get that back. In the global financial crisis, we had a debt bubble, but nobody was ever not allowed to travel because of a debt bubble, or not allowed to go to a restaurant because of a debt bubble. So we do actually have very high levels of debt in the economy, but on top of that, we have a biological restriction of movement. So a very real reason that the economy is shutting down. So this is going to get worse before it gets better. We're still in Act 1. And for the general economy, for the big businesses, this is batten down the hatches moments. And unfortunately, it takes a long time to build something, and it's very, very quick to destroy something. So for example, when you hear a business go bust, typically can go bust in a matter of, it can go from solvent to insolvent in 6 months. It might have taken, 15, 20 years to build the business, and then bang, it has a bad 6 months, it can go bust. So, I'm very sad if a business like Cirque du Soleil, a huge multi-billion-dollar entertainment business like Cirque du Soleil, they're laying off 90% of their employees because they're a live events business. It takes a long time to build a business that size, and a very short time to see it drop. So it takes a while for these things to come back. So normally it takes something like 5 to 7 years to see the marketplace get back to where it was. So that's kind of the big economy, the general economy. So if you think of it in two phases, reset, reinvent. The reset is getting back to the bone, a smaller business, getting back to the first principles, core principles. Reinvention is reinventing the business based on new technology, new ideas, new insights, new people. So reinvention is where all the growth happens and the excitement happens. Reset is doom and gloom. Reinvent is, I think we've gotten to the bottom of this and we can turn around and start building something. Now, the reason that entrepreneurs have a huge advantage is because we reset quickly. So a small business might reset in a matter of weeks and then start reinventing in a matter of weeks to months. So you'll find businesses, any business that sort of has less than 50 employees, within a couple of weeks, it can, right-size the business. It can become nimble again. It can drop down some key expenses, and it can actually start to get into that reinvention phase. So rather than taking 18 months to reset, it might take 18 days to reset, and then all of that additional time is a head start on the marketplace, a head start where you're not going to have any competition. In normal times, if there was a really great idea that a small company had, what you'll find is that big companies will go and compete. They'll put together a team, they'll try and compete. They'll say, oh, that WhatsApp thing, we should do that too. And rather than buying WhatsApp for 19 billion, they'll just kind of try and crush it and compete and squash it and all that sort of stuff. However, when you catch them off guard while they're fixing their core business, then they end up having to buy the companies that get out in front. So you find out that a few years after a recession, 5 years after a recession, you typically see some really big acquisitions where, these huge companies say, all right, we missed the boat on that. We missed the opportunity. So we need to buy the company that did well at it. So they get out there and start buying companies a few years after, when they're in their reinvention phase. So they get into the M&A stuff, when they realize that they've lost an opportunity or two. So resetting is cutting back to first principles. What do we know to be true about your business? What is the key insight about your business? Reinvention, building a better expression of the vision, mission, and values. So for me personally, what I know to be true about my business is that entrepreneurs want to stand out, scale up, and make a positive impact in the world. There are millions of people like that all over the world. All I have to do is cut back to first principles, that my business exists to get entrepreneurs to stand out, scale up, and make a positive impact in the world. So as soon as I get back to that original vision and mission, our mission is to develop entrepreneurs who can solve some of the world's most meaningful problems. That is strong. Our vision is strong. Our values, to be brave, to have fun, to make a dent in the universe, that's all strong. So we cut back to those first principles, and we start from there. And we actually get, as soon as we get back to that, we start. For those of you who have teams, let me talk about teams during this reset phase. So teams tend to exist as normal sized teams are like 2, 4, 8 to 12, and then 40. These are like kind of the normal entrepreneurial team sizes. It's very common that during the reset phase, you tend to drop back a team size. So if you're anywhere above 12 but less than 40, you should be considering dropping back from wherever you are back to around 8 to 12. If you're around 7, 8, 9, you might consider dropping back to 4. If you're 4, you might consider dropping back to 2. But essentially, a lot of companies, if they really have to get their overheads down, they drop a team size. And I find that team sizes are like 2, 4, 8 to 12, and then around 40 people. The kind of the stabilized team sizes that I see in different businesses. So it's always worth thinking about, perhaps during the reset phase, do you drop down a team size? You might also say, do we need that office? Do we need some of the storage sheds? What can we do without? Do we need all of those subscriptions to different tech platforms, or can we double down on one? So those are the types of things you want to be looking at when you're resetting. Reinventing is building a better expression of the vision, mission, and values. What you really should be thinking about is using this time as a way to build a business that is so much better than the business that you currently have, and that is on a trajectory that's 5 to 10 times better than what you already thought. So if you thought that your business is going to be a £5 million business, really, because of the disruption that we've had, you should be thinking about, okay, because of this disruption, we should be thinking about how do we design this to be a £20 million business or a £50 million business, because so much has been stirred up in the economy. People buy to solve problems, and there's now a lot more problems in the marketplace. So there's more money to be made, and there's a lot more money in the marketplace. Governments of the world are just shoveling money into the economy as fast as they possibly can. Reset, realignment of time, energy, money, and priorities, and getting that all lined up to your vision. Here's a great quote from Michelangelo. I saw the angel inside the marble, and I carved away until I set him free. So he was asked, how did you carve such a beautiful angel out of marble? And he said, well, I just saw the angel inside the marble, and I carved away anything that's not the angel. And it's a great quote, because what you want to do is you want to say, I see the vision of what my business can become, and I'm going to carve away anything that doesn't get me closer to that vision of where the business is going to be. The other thing that's really worth doing is a vision of where you want to be and create a perfect scenario situation. So if you were to think about yourself in 5 years' time and life is 10 out of 10, and you say, everything worked out absolutely beautifully, everything's perfect, I could not wish for a better business, what would that look like? Would it be a lifestyle business? Would it be a performance business? Would it have 8 people on the team? Would it have 80 people on the team? Would you be partnering with Microsoft? Would you be partnering with a celebrity? What kind of products would you have? Would you have a best-selling book in the marketplace? Would you get paid to speak all over the world? What would be the key things that would be the best case scenario for you to get to? So it's always good to paint a perfect picture as a guiding star. And some of the fun things that I always like to do with entrepreneurs is to say, what would be the 11 out of 10 moments? What would be the absolute peak moments that would make you feel like you'd really achieved? Is it giving a TED talk? Is it getting an exit? Is it getting investment? What are the really peak milestones that you want to shoot for on your entrepreneurial journey in the 5 years ahead? So picking those, what does a 10 out of 10 look like? What are some of the 11 out of 10 peak moments look like? I suppose that's a bit American. It sounds very Tony Robbins, doesn't it? 11 out of 10. There's no such thing as 11 out of 10, right? But in our minds, you get what I'm saying. Okay. The next thing I love to talk about is the entrepreneurial mindset. I believe that it's really important during these times to have a high degree of self-awareness. And there's a particular type of self-awareness that you want to have when you're going through a time like the one that we're in. And that particular type of self-awareness is an awareness around who makes the decisions in your business. Because inside your brain, there's 3 decision makers. There's the reptile, the monkey, and the entrepreneur. The reptile is fight, flight, or freeze, panic, freak out, throw tantrums, get upset. The monkey is, I just want things to go back the way they were. I want to do business as usual. I don't want to innovate. I just want to be in my comfort zone. And the entrepreneur is reverse engineering the future, spotting the opportunities, seeing the partnerships, looking for game-changing innovation and ideas, creativity, empathy, joy, passion. So you want to make all your decisions from the entrepreneur. The big difference between those who really make it and those who struggle often comes down to really just how much time each month you spend in reptile versus monkey versus entrepreneur. Reptile tends to unravel you. Monkey tends to, you just get by. And entrepreneur tends to be transformational. From a scientific perspective, when you're on vision and purpose and you're in the visual cortex of the brain, you're actually 10 to 14 points of IQ smarter than normal when you're in purpose mode. During normal times, you've got monkey mode. You know, a client leaves, you get paid, tough meeting, team outing. It's all kind of meh. And then you get disrupted. So you have disrupted mode, and this is where your brain goes crazy. Lose a client and it feels tragic. It feels like you need to go and curl up for a day just to get over it. You have a big idea that feels like amazing. You sign on a new client, you could kiss them. You could just hug them because you've signed a new client on. A bill arrives that is just even a normal bill and you feel devastated by the bills, right? So this is high highs, low lows, the entrepreneurial roller coaster. As fast as possible, you got to get yourself back to high frequency thinking, an alignment to vision and purpose, vision, strategy, priorities, getting stuff done, working on the business, implementation, making things happen, and being operating from the inspired mind. The fastest way to do that is to have a cause or a purpose in the business that is so beyond making money. It's beyond the P&L. It's beyond the balance sheet. It's beyond what you think you can do all on your own. It's a massive problem that needs solving in the world, and you're going to have to enroll hundreds of people in order to solve it. The best framework for this is the United Nations Global Goals. If you can come up with the United Nations Global Goal that aligns to your business, it's a really powerful move. I encourage you to have a look at these United Nations Global Goals and pick one for the head, one for the heart. Which UN Global Goal is perfectly aligned to your brand. So for example, if you do training, maybe quality education. If you're a gym, maybe good health. If you're a restaurant, no hunger. If you're a business coach, good jobs and economic growth. So those are ones that align to the head, they're a good fit to the brand. And then there's ones that just align to the heart. So life below the water might be one, or climate action, or gender equality. These are the ones where you just kind of might have a feeling that this is something you want to do in the world. And when you pick two of these, a head and a heart goal, then you turn that into your guiding star, and you turn that into making decisions that are in alignment with those greater purposes. And if the more you talk about this with yourself and your team and your customers, the more you inspire yourself and everyone around you to get back into the visionary mode of getting things done and making bold moves again, being brave, having fun, and making impact. So this is like one of the key hacks for just getting straight onto purpose. I know people who have spent $20,000 going on retreats in Bali and Fiji and all this sort of stuff, trying to find their purpose. And like, I've sat down with them and done this, and they go, oh, wow, I just got more out of the last 15 minutes of looking through these than in the $15,000 I spent going to Fiji. So I'm just going to pause here and just see if there's any questions that I can stop, and we'll just see if there's any questions at this point. And maybe Chloe, if you can help me. Okay, Jason. Jason said, can you please explain the reaction to the reaction? So the reaction to the reaction, when a marketplace drops, first there's the big shock, then there's how all the big companies react to the shock, and then there's the domino effects, the reaction to their reaction. So that tends to be the three-part play. I hope that's clear. Real disruptions don't occur regularly. When do you think entrepreneurship and innovation flourish? During ordinary times, during disruptions such as the one we've been witnessing, or during radical situations such as when you have a financial crash? I think the best entrepreneurship opportunities come out of huge disruptions. That's the best possible time to be an entrepreneur. I think when the marketplace is really hot, like it was in 2017, 18, 19, I actually felt it was overheated, and it was actually a really hard time to succeed as an entrepreneur because you were up against so much good competition. Every market was saturated. Everyone was very, there were big competitors spending money, losing money on loss leading campaigns. And actually, it's through disruption that you get the best companies that really hit it out of the ballpark. Do you think now is the time to put risk on raising money if your existing funding links? If you existing, sorry, I'm not sure that last part. Raise money if your existing funding links. No, I don't necessarily think it's time to take huge risks. I think you should take calculated risks. I think you should. It's a great time to have talent, right? So one of the reasons disruption is awesome is because amazing people become available who otherwise would be working at Microsoft. And otherwise they'd be working in a bank or in Google or something like that. And then suddenly you've got, these big companies aren't hiring anymore. And it's just awesome. Time to get talent, and to accumulate talent means that you accumulate credibility. And people will actually volunteer some time, or they'll get involved in the company, in exchange for some options or something like that. If you've got opportunities for funding, it's a great time to get funding because there's not many other opportunities going for investors. Investors don't want to put their money into stocks and shares. They don't want to put their money into property. So if you're an investor in big assets, normal traditional assets, it's already too late to sell and too soon to buy. So hence there's this kind of twilight zone where, you might as well put some money into a startup and get a tax break, especially if you're earning decent money in a corporate. It's a great time for startups, and especially to be backing your friends or backing people that you already know, who speak the same language and have spotted an opportunity that you understand. Given that we don't know how long this crisis will last, but wanting to grow and flourish at the same time, is it a good time to invest hard or save hard? Yeah, look, I'm not going to give really investment advice on this. I want to stick to the remit of entrepreneurship. For me personally, regarding investing, I think it's too late to sell, too soon to buy. So if you haven't sold out of your assets, it's too late to sell. You've already taken the hit, and it's also too soon to buy. It's very possible that we have another big drop. I think we probably will, it's not necessarily the right time to be buying anything just yet. I think the time now is to put together teams, to come up with better innovation, to be an entrepreneur. I don't think it's a good time to be saving. In terms of when economies get flooded with cash, the value of savings reduces. But it's certainly a good time to be an entrepreneur. Do you think anything digital, connected, related has more chance of succeeding? Yeah, 100%. Technology, anything that is technology, anything that's recurring revenue, contracted revenue, anything that revolves around data, insights, that's the stuff that will eventually get bought. If you want to get a big exit, you want to be in technology in some way. If you want to have a lifestyle business, you probably want to be in something like training or coaching or, one of those kind of businesses, professional services where you can earn a great income with flexible hours and flexible time, and you want to underpin it with some technology and some media, some digital assets. It's a really good time to be developing digital assets. Digital assets are really the key at the moment. If you think about a digital asset, it has a couple of attributes. Anything digital transcends time, so it'll be available a long time from now. It transcends space. It can be available anywhere in the world at no additional cost. And it transcends wear and tear or decay, which means it can be watched 1 billion times and lose no quality. So when you create anything that's digital, you're actually enhancing your own ability to influence time, space, and impact. So creating digital assets right now is the absolute key to it. So some good questions there. I love that. That's really, really great questions. Let me move on. Let's talk about how to reinvent. So that was all about reset. Let's talk about reinvention. Okay, so reinvention is about getting onto the entrepreneurial journey. The entrepreneurial journey is very predictable, although most companies don't know the steps to take in the entrepreneurial journey. So therefore, they get stuck. So if we look at the data says that only 45% of businesses cross the VAT threshold. That's only 85,000 of revenue. So less than half of all companies hit 85,000 of revenue. If you're under 85,000 of revenue, you basically have the worst parts of a job without the good parts of a job, and you have the worst parts of a business without the good parts of a business. So it's a unfortunate position to be stuck in, and yet 55% of all businesses get stuck under the VAT threshold. Only 25% of businesses employ one person. Well, that sucks because business is a team sport. One of the very first hacks that you discover in business is division of labor. Division of labor means that, if one person's just focusing on selling, then they tend to sell a lot more than if they have to worry about how the customers get looked after or how the finances get calculated. So if you don't have any employees, it means that you don't have any division of labor, and means that everyone dilutes their time significantly and is highly inefficient. And only 3.5% of businesses employ 10 people. Normally employing 10 people means there's some sort of underlying asset, there's some sort of stable business that has some growth in it. And it's 3.5% of businesses. Now, what's crazy is that 10 people, there's a lot of hair salons, a lot of restaurants, a lot of cafes, a lot of pubs have 10 people. And it's quite shocking that only 3.5% of businesses are in that category. So it's about 1% of businesses that actually do 2/3 of all the revenue in the whole of the UK. There's only about 45,000 businesses that make up 65 to 70% of all of the revenue. And those businesses are by far the most profitable. So by and large, it's the top 1% earning 2/3. So you really have to figure out whether you're going to build something that you think has a shot at being disruptive and moving its way to the top and moving its way to profitability. Let me share with you where some good things to be looking out for. Number one, choosing a good concept. So if you said, I want to become a millionaire, and my strategy for doing that, my concept is to become an Uber driver, it's highly unlikely that there's any path at all to being a millionaire if you're going to be earning £15 an hour as an Uber driver. It's a saturated marketplace. The price is set by somebody else. There's a very established market for it. So therefore, that concept is unlikely to match your ambition. So you have to figure out, is your concept going to live up to your levels of ambition or not? The good news is that after disruptions, you will see brand new concepts that emerge. And most of these concepts rely upon new technology. Well, the good thing is that what we have in the midst of this disruption, we've got a 5G rollout, which is a brand new technology that gives rise to phenomenal transformation in society. Putting the health concerns aside, because I know some people are worried about health concerns, but health concerns aside, 5G is way, way, way more transformational than just faster internet. If you think 5G is about faster internet, you've massively missed the point. I'll give you an example. 5G, if the entire city was full of high definition cameras that were observing everyone, and you had facial recognition system and AI, you could literally say, I want an Uber, and a HD camera somewhere would pick up that you'd said, I want an Uber, and without even picking up your phone, a car would come by and it would know who you are, it would recognize your face, and all of that would be made possible by 5G, because 5G lets devices talk to each other. It transmits enormous amounts of data and information. So my guess is that by 2025 to 2030, a lot of the things that you have to pull out and do on your phone will dematerialize, and you'll make a gesture, or you'll say it, you'll just say it, and it'll happen. So that's made possible by 5G. So that's going to totally disrupt all sorts of industries. There will be a massive transformation driven by AI, 5G, all Internet of Things, all of that. My belief is that there's a $1 trillion company on its way. It's being founded right now somewhere out there in the world. There's a Zoom call going on where people are discussing an idea. They're founding a company right now in 2020, and by 2030 they'll join the ranks of Apple and Amazon and Microsoft and Google. They'll disrupt something like healthcare, education, banking, and they'll become a $1 trillion company. And when they interview the founder will say, this company was made possible because of the shutdown. Because of the coronavirus shutdown, we were able to find our team. We were able to research the opportunity. We had 2 to 3 months where we could work together and everyone had time available. And we started one of the world's best companies as a result. So I think that's on the cards, right? I know it's a big, bold, crazy thing to say that there will be a $1 trillion company started and it'll achieve a $1 trillion valuation by 2030. But I'm just going to put it out there. A great concept is something you're passionate about, and you've been passionate about it for a while. You've got like 5 to 10 years at least worth of passion behind you in this. You've identified a problem, something that sucks, that needs solving, and people agree with you that it is a problem. And then you've identified people who are willing to pay to have it solved. And if you can get those 3 right, you've actually got yourself the making of a great concept. You don't need much more than that in the early stages. The best way, I know this is going to sound really weird, but the best way to improve a concept is through surveys, face-to-face surveys in particular. If you can sit down with someone or have a Zoom call with someone and ask them specifically, what problems do you have on a weekly basis? What have you tried before? What do you spend money on that you don't think you're getting good value for? What do you wish you could do that you can't currently do? And the more you can get people talking, and you can write it down, record it, transcribe it, the more you'll develop insights. If you do 30 surveys, you'll end up with a much better business than had you not done 30 surveys. And what you're trying to do is at least get closer to passion, problem, and payment. So the next phase, after you come up with an idea, coming up with a concept, is to go out into the wilderness. Going out into the wilderness is basically trying to sell stuff, see if you can get people to sign up. And it's normally one founder or a co-founder, 2 co-founders. You roam around trying to survive. You try and cobble together some suppliers. You try and cobble together some customers, and you try and learn. And you see how the marketplace is in reality. You can't do this in simulation. You can't think this through. You actually have to go out and sharpen up your ideas in the market. You can't sharpen your ideas in the mind. So you have to go and hit the marketplace for real. You've got to make 100 calls a day. You've got to talk to hundreds of people. You've got to run the ads. You've got to talk to people on the phone. I can't stress enough that it's really good to avoid technology in the early days and just talk to people and actually do everything manually with your hands and with your, on the phone, just clunky technology, so that you can actually get an experience of each person and find out what's really going on with your customers. When you cross the VAT threshold, that is the marketplace telling you that you're onto something. They're saying, yeah, you know what? There's some business here. And at this point, you need to refine through contact with the marketplace. You're trying to find a good answer to what is the concept, who is the best audience for the concept, what is the offer that they respond to, and how do I make a sale? And that basically becomes your main 4 questions in the early days. Oh. Sorry. So those are your big 4 questions in the beginning. Sorry, it just keeps going. The next phase of the journey is building a small team. And this is where you put together a boutique. And here's the best way to build a struggling boutique that never takes off. You've got to have 3 roles: sales, marketing, admin, management, and technical delivery. And between these 3 roles, you'll always struggle and it'll never take off. It'll always be that you add one more salesperson and then that doesn't work. So you add a technical person, then that doesn't work. Add another salesperson, add an admin person, add a technical person. You get yourself up to 9 people not making any money. And that is very common. What you need is to build one of the very first types of profitable businesses that you'll see. And this is a lifestyle boutique. And what works with a lifestyle boutique is that one person's job is to be the evangelist for the business. They're the key person of influence. They get themselves in the media. They focus full-time on recruiting, on partnerships, on pitching people, on raising funding, on doing product innovations, on talking to customers about the bigger picture. So they're out there being the key person of influence. My very first company took off because we signed up a key person of influence as our figurehead. This particular person who took that role didn't work a day inside the company. We paid him 5% of every sale in order to just have his name on the company and to have him do a few talks for us throughout the year. So the big 5 things that you do as a key person of influence is pitching, publishing, product creation, raising profile, and doing partnerships. Those are the 5 Ps. That's the key person of influence methodology. When you get to 12 people, you have to make a decision. Should you level up or scale up? Leveling up means building a better business. It gets better every quarter, but not bigger every quarter. So you might have more revenue, more profit, more technology, better people, more data, all of that stuff happening, but you're not increasing the headcount past 12. So you're trying to stay around 8 to 12 people as the largest. And then scaling up says that we're going to go for a jump and we're going to try and get up to 40 plus people. And basically, little lifestyle business can be the best thing ever. 4 people, 8 people, 12 people, but never ever 13, 14. And I'll show you why in a second. And the 40-person business, that works as well, 40 to 150 people. But here's what doesn't work. When you get to 12 people, everyone gets along really well and everything works just smoothly. 13 people is a weird size because now you have half the people who want to be big and half the people who want to be small. And you begin this weird phase called crossing the desert. And basically what happens is as you add people, you add complexity. So when you've got 5 people, you only have 10 possible conversations happening, but 8 people is 28, and 12 people is 66 potential lines of communication, 14 people is 91 lines of communication. So the complexity goes really big, really fast. By the time you get to 50 people, you've got 1,225 lines of communication happening. So between 13 and 40 people, you're too big to be small, you're too small to be big. You need a CFO but can't afford a CFO. You need bespoke software but you can't afford bespoke software. You need capital to invest. You can't afford to invest. All of that stuff starts happening between 13 and 40 people. The team get really weird. They start having romantic relationships, fighting. All sorts of stuff starts happening between 13 and 40. By the time you hit 40, you tend to sort it all out. So essentially, you build your assets, you go from a little go-karting team to a Formula One team, and you end up with proficiency in your intellectual property, your brand, your market position, your products, your systems, your culture, and your funding. So all of that comes together nicely. And basically, your journey has been to establish value, to expand your influence, and then to formalize your assets in the marketplace. So that is the reinvention cycle. When you reinvent, you reestablish the value, you expand your influence, and you formalize the asset, and then you've got options from there. So I've also done it as Leonardo DiCaprio movies for fun because I'm on lockdown and I've got nothing else to do. I hope that's been helpful and useful. What we'll now do is I'll stop sharing and we'll go into Q&A. So let's just see if there's chat, if there's Q&A. I'll just go with Jay's question here. Do you think that corporate accelerators have overwhelmed the innovative startup market? The fund them, nurture them, resource them, and then swallow them. What happens to those startups which are not in the accelerator club? I believe that environment dictates performance and that there is no such thing as good people or bad people. There are people who are in the right environment and people who are not in the right environment that works for them or doesn't work for them. I believe strongly that accelerators offer a huge amount of value because they're resource rich. You surround yourself with mentors, with a great peer group, with great ideas, with best practices, with accountability. A great accelerator offers that environment, that high performance environment. And it's well and truly worth it if you really want to smash it out the ballpark with your business. With that said, I feel like a lot of people in entrepreneurship at the moment, they forget that it's competitive. They forget that entrepreneurship is in many cases, a winner take all or winner take most environment. And especially a lot of people kind of under 35, they believe that there's almost like it's not a competitive environment. They feel like it should be really ultra supportive. To a degree, things are ultra supportive, but also it's ultra competitive. So it's worth keeping that in mind, that there is an element of supportive. It is supportive, but it's also, everyone's in this. If you're in the world of entrepreneurship, you're there to build a commercially successful venture, and so is everyone else. Everyone else is looking to put their time and their energy into the most highly successful ventures that they can. Next one, how quickly do you think new disruptive startups need to move from entrepreneurial to managerial mode? Depends on the industry. I personally don't think entrepreneurs should ever move to managerial mode. I've never managed any of my businesses. I've got about 7 companies at the moment. I'm not the manager of any of them. There are businesses that I own the main share of, and I've not actually been to the offices ever, and I've owned them for 3 years. I think entrepreneurs typically make terrible managers because they're too disruptive. They stop people from working. They interrupt the workflow. Entrepreneurs should get out there in the marketplace and evangelize in most cases, I think. Simon, what have been the biggest changes Dent has made with the current global issues? Great question, Simon. So this global change has actually educated the whole world that everything can be done on Zoom. And we've achieved more in the last 2 weeks in terms of taking our business mostly online or mostly connected real time. So our accelerators very much revolved around coming and doing things in a physical location and doing what we've set out when we want to do it. And within 3 weeks, we've evolved into doing what you want to do wherever you want to do it with our full support and our help. We've found ways to completely reverse the equation, that we can support our clients in real time with what they want to work on, as opposed to in our time with what we want to work on. And it's been just the best shift. In 3 weeks, we've done more transformation and innovation than we had planned for 12 months. It's just been so thrilling, so exciting. One of my other technology businesses that I've got, we've done our first, significant deal. We've made a great hire. Like, all of this cool stuff is happening. Things that were going to take 6 to 12 months at Dent are happening in 6 to 12 weeks or less. How do you help your team realize that we're in a totally different place to where we were 4 to 6 weeks ago, and we need to do things differently while not scaring the shit out of them? Great question. Well, unfortunately, with my team, I did have to scare the shit out of them. I just simply said, there's a torpedo in the water, and if we don't transform the business, then we're going to get hit by it. And we've got 3 or 4 weeks before it happens. And then after there's 3 or 4 weeks, there's going to be, in 3 or 4 months, there's going to be a real change to the economy in 3 or 4 months from now. And, that's where all of the decisions start catching up, where the real impact is going to be 3 months from now. So the fact that we're closing things today will change things in the future. So I basically said, I used metaphors and analogies with my team, like there's a torpedo in the water, or our house is on fire, and we've got to fix it. We've got to transform it. We were a go-karting team, and the world just has moved into Formula One. We've got to rebuild the car and be in the Formula One now. So it's been great. I've basically said, guys, this is the time that we need to double down and be our absolute best. It's brought the best out of the team. So I've just had very honest conversations with people. I assume that people are grown-ups. If they get freaked out, then furlough them until such time as they cool down, and get them back on the team when they're ready. There is an emphasis on going digital and using tech to survive the moment. Is there a chance that companies will become too dependent on digital and this could be detrimental? Hannah, great question, really great question about being too digital. Digital has a lot of danger in it. And the danger is that you give away all your value for free and you put it into a format that has infinite supply, which means that there's no demand and supply tension, which means prices fall to zero. So when I see people putting courses online, I know that that's actually a very fast path to zero. When I see people giving away all their best stuff in, online groups and just, not having a business model that can translate that into business, I can actually see that they're actually going to drive their business out of business. The other thing too is the word online is a very dangerous word. When you talk about taking a business online, what the customer hears is, I'm going to have less contact with you. I'm going to be further away from you. I'm going to be less connected. I know it sounds ironic, but most people think of an online business as a less connected business in the same way that you can never call up Facebook and ask them their opinion on something. We think of online businesses as being very disconnected and far away from us, and like almost, esoteric. So you need to be really clear with your customers that you're not taking your business online, you're taking your business closer to them, you're taking your business in real time, you're giving more, you're delivering more flexibility for them. And you got to do it with a lot of really good thought behind it, or else you can basically send supply to infinite, and then prices fall to zero. Thank you for a great session. Oh, my pleasure. As a sales trainer, I'm as popular at the moment as a loo roll and hand sanitizer. For years, businesses have relied heavily on marketing as they have inbound inquiries. Do you think they will finally value the importance of proactive sales? Well, it's not so much they, Alison, it's more you just need to find the ones that will. So everyone has to find that needle in the haystack. They've got to find that customer that really understands the value of outreach, in your case. And when someone says, oh, that's not how we do things, fine, let's get on to talking to someone else. Much the same as sales, you have to kind of, make your 70 call attempts in order to speak to 12, set 10 appointments, make 2 sales. It's the same. You've got to go finding the companies that really want to double down. My belief is that in the marketplace, if your business is normally going along in equilibrium, for a number of people, your value just drops. They don't want to work with you at all during disruption. But for another group of people, your value goes up higher during disruption. You've got to figure out how to avoid the people who see you as less valuable than before, and double down on the people who now see you as more valuable than before. Do you think the same numbers still apply to a business like a restaurant that has a very small business, easily already has 13 people as part of its team? Yeah, restaurants are incredibly hard to make profitable unless you're a celebrity. That key person of influence has to be almost a celebrity chef, and it has to be someone who's got the cookbook out. They've got a following. They've got the 50,000 people on Instagram. It tends to be, unless you've got that kind of key person of influence status. The problem with restaurants is everything's priced into the equation. There's no arbitrage at all. If you're in a good location, then the rent is higher. If you're in a terrible location, the rent is lower, but it's a terrible location. It's actually very difficult to create an arbitrage with a restaurant business. Highly commoditized, red ocean, deeply affected, very low digital delivery. When you do digital delivery, the value of that gets transferred to a different company, not necessarily the restaurant. So my answer for most restaurants is you've got to have a famous founder or a famous chef or something like that. When do you think the investors and funding will get going for startups and growth stage? I'm seeing that they're still interested, personally. The really good investors, they recognize this is an interesting time. It might take them longer to make a decision. It might mean that they want to really see that your business can survive. They might want to see a revised business plan. But at no point in the cycle are investors just throwing money at people, typically. and you've got to go through and do multiple meetings and build up trust and credibility. And this is no different. And you just have to answer their key concerns. The key concerns most investors have is, are the assumptions that you've built the business on thus far still true given the current marketplace? And if you can demonstrate that you're getting great sales, that you're getting people signing up, that you're getting people coming to you for what you do, then investors will be interested. If it appears that it's always the old rule. If it appears that you need investment because things aren't working, then you will never get any. And if it appears that you don't need investment because things are going so well, then you'll get plenty. So if you can show an investor, you say, oh, we had 1,000 subscribers and it's just jumped up to 2,000 subscribers. We had people paying £30 a month and now we've put our prices up to £35 a month. Investors are suddenly sitting there saying, how much money do you need? So you've got to make sure that the worst thing to go to investors is to go to them and say, now that the market's changed, we really need some money to get through this. It's like investors don't want to help you. They want to help themselves make money. So you've got to show them, you've got to put yourself in their shoes. They want to back a winning horse, a horse that's obviously going to win. So that tends to be the key thing there. I hope that's been of interest. We're right up on an hour there. That's the time that you've blocked out. So I want to be respectful to everyone's time. I hope that's been valuable. I hope you got a couple of key ideas. It would be really useful for me if you can share in the chat section what was one key idea that you got. If you can share that in the chat section, that would be lovely. Just so I can kind of get a sense as to what stood out as a key idea or a key insight during that talk, because I'm giving a few of these talks and I want to kind of spend more time on the stuff that really resonates and spend less time on the stuff that doesn't. So I'd really love it if you could share with me one key insight that stood out for you as something that was helpful. Thank you very, very much, and handing back to you, Chloe.
Thank you, Daniel. That was fantastic. And thank you for taking the time out of your day today to join us. I'm sure our audience will agree that this session was incredibly beneficial for all those entrepreneurs out there battling through this current situation. If there's anything you'd like to catch up on from today's session, we'll be sending out a replay of the webinar in the coming days. I've also included Daniel's Twitter in the comments section if you would like to get in touch with any further questions for him. Our next webinar in the Business COVID-19 series takes place on Monday, which is the 6th of April, and we'll be joined by John Stapleton, founder of New Covent Garden Soup and Little Dish, who will be talking about business readiness in tough times and preparing for coming out of the other side. If you haven't already, you can register for this webinar at freshbusinessthinking.com, which is also now linked in the comments as well. Thank you for joining us today, and thank you for your time again, Daniel. That was fantastic.